Welcome to the Explainer. Today, we're doing something a little different. We're going to be detectives. Our mission? To decode one single, crucial day in the European energy market.
So, how is the price you pay for fuel really decided? You probably think it's all about crude oil, right? But honestly, that's just chapter one. The real day-to-day drama, the real reason prices pop and drop, well, it's hiding in plain sight, inside these professional reports that, let's be honest, look like a total wall of numbers.
And this right here, this is our case file for today. It's the S&P Global European Marketscan for November 24th, 2025. I know it looks super intimidating, just a mess of numbers, but trust me, inside this thing is a full-blown detective story. We're talking clues, surprising witnesses, a trail of money that literally stretches across the globe. And today, we are gonna crack it wide open.
All right, let's get into it. Before we can start following the money and, solving the case, we need to understand our main piece of evidence. Like, what even is this report? And what language is it speaking?
So think of this report as the daily diary of the energy market. It's literally a snapshot in time, published every single day that tells everyone, traders, refiners, airlines, you name it, the exact value of everything from the gasoline for your car to the fuel in a jet engine on that specific day.
And to read this diary, you really only need to know two key terms. First is FOB, which stands for free on board. That's basically the price of the fuel right at the source, at the refinery, before it gets put on a ship. Then you've got CIF, that's cost, insurance, and freight. And that's the price you'd pay for that same fuel delivered right to your port. See? Simple. Source price versus delivered price. Got it? Good. Let's use this to go interrogate our first suspect.
Okay. Let's bring in our first suspect, a product we all know and, well, we all use it, gasoline. What was its story on November 24th? The report's commentary section gives us our very first clue.
Eurobob cash differentials continue to slide. Okay, that sounds like a bunch of jargon, right? But Eurobob is just a code name for the main type of gasoline traded in Europe. And sliding? Well, that's just market speak for the price is dropping. So the report is basically telling us, point blank, that gasoline is getting cheaper. The question is, by how much?
And boom, the hard data confirms it. Down $7 per metric ton. Now that might not sound like a lot, but in this world, that's a pretty significant drop for a single day. Which leads to the big question every detective has to ask. Why? What happened on this one day to make gas cheaper all across Europe?
And just like that, the commentary gives us the answer. Clue number one, demand is softening a little. But here's the real smoking gun. A huge refinery over in Mumbai, India, just came back online after being down for maintenance. Think about it. More refining capacity, even thousands of miles away, means more supply for the entire global market. Traders in Europe see this, they know more product is on its way, and they start offering lower prices almost instantly. And just like that, case closed.
All right, but now let's bring a surprising witness to the stand. One whose story is, well, it's a lot more complicated. Let's talk about jet fuel. Because while gasoline's price was just sliding, jet fuel's price was in a total nosedive.
Yeah, look at that. Jet fuel prices fell by a whopping $14.50 per metric ton. That's more than double the drop we just saw with gasoline. And this, my friends, is where our detective story gets a major plot twist.
Okay, so here's the mystery. This huge price drop happened at the exact same time that local supplies were actually shrinking. I mean, inventories at Europe's main storage hub fell by 12,000 metric tons. Now, normally, basic economics, right? Less supplies should mean higher prices, not lower. So what on earth is going on here?
For that, we have to turn to an expert witness, who's quoted right in the report. Michael Longs from Lufthansa says the volatility, these crazy price swings, they're not really about crude oil. The real problem is refining. He says there's a global shortage of capacity to turn crude into the fuels we actually use, like jet fuel. The whole system is just stretched incredibly thin.
So here's the crucial point. The jet fuel market is caught in this massive tug of war. You've got fears over Russian sanctions and that super tight refining capacity trying to pull prices up. But on the other side, you've got holiday travel picking up, which is draining the local stockpiles. And at the same time, super competitive offers from traders on this one specific day manage to drag the final price down. It's just a perfect storm of conflicting pressures all hitting at once.
But this story is so much bigger than just the fuel in our cars and planes. The Marketscan also tracks the fundamental building blocks of our entire modern world, and it reveals this much wider web of connections.
For example, this report also follows something called feedstocks, and one of the most important ones is called naphtha. Now, you've probably never heard of it, but I guarantee you use it every single day.
Naphtha is a true unsung hero of the modern world. It's a key ingredient for making high-quality gasoline, sure, but it's also the base material for the entire plastics and petrochemical industry. So its price isn't just driven by people driving cars, it's influenced by completely different forces, like the report says strong demand for gasoline way over in Asia, which is creating a record east-west price gap.
And if you look closely, buried deep within all these tables of data, you can actually see a glimpse of the future. The report is already tracking prices for renewable and sustainable fuels, and that tells us a lot about where the energy transition is really heading.
And this right here, this illustrates the massive economic challenge of that transition perfectly. On this particular day, regular old jet fuel cost about $730 a ton. Bio-naphtha, which is a green alternative, was double that. And sustainable aviation fuel, or SAF, we're talking nearly 4 times the price. These numbers just lay out, in stark black and white, the incredibly steep climb we have ahead of us to decarbonize industries like aviation.
So, okay, we've followed the clues, we've heard from the witnesses, and we've uncovered these wider connections. We've basically decoded the Marketscan. But what's the final verdict? Why should you care that a single refinery in Mumbai is back up and running?
It all comes down to the ripple effect. That refinery starts back up in Mumbai. That adds more supply to the global pool. Traders in Europe see it happening, and they immediately start offering lower prices. That brings down the wholesale cost of gasoline, the price your local fuel company pays. And eventually, and yeah, it's not always right away, but eventually, that can lead to lower prices for you when you fill up your car. A single event half a world away can literally reach out and touch your wallet. So think about this. If one single refinery can influence fuel prices for an entire continent, what happens when you throw geopolitics, the demand of a cold winter, and the massive pressure of the green transition all into the mix at the same time? The energy market isn't just a bunch of numbers on the screen. It's a complex, deeply interconnected global story that's being written fresh every single day. It's a story of supply, demand, logistics, and human behavior. And now you know how to read it.